Number one question, without a doubt, over the past few days that we received from clients is how high do we expect the price of gold to be able to go over time? The short answer is a lot higher, and there's multiple reasons for that. The number one reason being essentially due to monetary debasing, and that a lot of people, institutional investors, are buying things to preserve their buying power, essentially, right? So that's really the biggest sort of big picture thing. But that all comes down to a time frame analysis. So let's jump into the chart where you will see this is the chart that most people are looking at right now. This is the GLD ETF, and they're looking at it through the lens of, a few days, maybe a few weeks at most, and they're seeing an asset that has gone, for the most part, parabolic over the past few days. Again, this is the GLD ETF. If you just look at it over the past 3, 4, 5 trading days, it rallied about 4 or 5% or so, which is a lot for something like gold. But one of the things that we always talk about, and unless you're brand new to our videos and our thought process, you've certainly heard me say this before, what we always talk about is the importance of multi-timeframe analysis. And so what I'm going to do is, first of all, I'm going to flip over to the futures contract because it goes back, has much more history than the GLD ETF. And then the other thing I'm going to do is I'm not going to make this a daily chart. I'm not even going to make it a weekly chart. I am going to make this a monthly chart, meaning each bar, each candlestick is 1 month worth of price action. And then the last thing I'm going to do, I'm going to make it a logarithmic chart, which it actually already is right now. And so what this does, it gives us an entirely different picture of how this asset is actually looking. And you can see that gold had a very strong rally from the second half of the 1970s into the end of the 70s. Then it basically did nothing until it started breaking out again in 07, 08. And then it had a really big move, right? So if you look at it this way, like you can look at this in multiple different ways, and you can draw lines in 1,000 different ways. But I want to at least quickly show you the way we're seeing this. So you essentially have this move, right? The consolidation period. Then you had this really big move. Then you've had another consolidation period from 2011 through roughly now. So that's this consolidation period. And now if you want to be bold, you would say, okay, well, all we're doing so far is getting to the upper end of this trading range we've been in since 2011. So the argument would be, and this, you can back this out by going a lot deeper than drawing a couple lines on a chart, by looking at the actual real, purchases of gold being done by governments for years now. The retail community, institutional investors have been buying it as well, and the momentum is really there to create the next bull market. Now we've been bullish gold and gold miners since the beginning of 2019, January 7th, I think, or something like that. And we continue to be bullish from a thematic perspective. Is it short-term overbought, from a daily basis, maybe for a couple of weeks? I think it could be. And we've taken some profits on the trading side. But let's talk about how far it could go if this move that we're seeing right now is really just the beginning of a breakout much higher through the lens of the next maybe a few years. And so in order to do that, what we can do is something very simple. We will simply take an extension analysis. So we're going to take the move from the lows in 01 to the highs in 2011. And then we are going to literally just duplicate that line. And I'm going to add it to the bottom here of 2015. And what you get, if you were to see an extension move like that, you could easily see this asset move towards about 3,000, right? That right now seems crazy to even think about or talk about, but by just doing that very simple analysis, you could make the case that from here, not in a straight line, none of these things move in straight lines, you could see the gold price move another 50 or so % over time. So our profit target on this is probably more like 12 months, maybe more, right? Maybe 24 months. And I know this sounds like a massive gap, but that's more of an investing sort of trajectory. In the short term, there are going to be trading opportunities, and one thing I can tell you, and we describe this to our clients almost on a daily basis. One thing you can do is use a simple 8 and 21 day moving average analysis. Now going back, let's go to the GLD ETF, because that's the one that we use to do the short-term trades. And you can see that we're once again getting to the point where gold, the GLD ETF, is getting rather extended above that purple line. That's the 8-day moving average. So, from that perspective, I think it's probably due for a pause. It doesn't mean it has to fall. It could go sideways and let the moving averages catch up. But, buying it up here and chasing it from a trading perspective doesn't seem to be very good reward to risk. So in summary, long-term profit target on gold, and again, that's a 12 to 24 month profit target in my eye, could be, close to 3,000. Maybe it's in the range of 2,600 to 3,000. Again, that's a big range. I understand that, but we're also talking about much wider time frames. So anyway, folks, I hope this makes sense. If you have any questions or comments, leave them down below. Subscribe, spread the word, and I'll see you soon.